After each quarter, we poll civil construction professionals across the country to track confidence in the civil construction industry so that we can keep a pulse on where the market's heading. Today, we're breaking down the results of our post Q1 2025 civil construction confidence poll. Hi, I'm Taylor Maurer, founder and senior managing partner here at Heavy Civil Resource Consultants. We're a boutique recruitment firm focusing on infrastructure, construction, and engineering. Let's dive into our results. After Q1 of 2025, 24% of construction professionals expected strong growth over the next 4 quarters. 43% anticipated moderate growth. 22% thought the market would stagnate or stay the same. And 11% thought the market would shrink. Now, this is a stark difference from our post Q4 poll of 2024, which was riding high off the GOP taking control of the White House and the majority of the Senate and the House. We saw a huge jump in optimism. Those poll results reflected 30% thinking there would be strong growth, 49% predicting moderate growth, 19% anticipating stagnation, and just 2% believed the market would shrink. Now, some may be alarmed that this is a major drop in confidence across the industry. Now, with Trump in office, we are seeing major shifts in policy, which has the potential to have a huge impact on our industry between the tariffs and immigration. Post Q1 2025 results more closely reflect the post Q3 2024 results that we still have when we were still unsure of who would be in the White House. Q3 of 2024 results, which reflected notable caution. At that point, strong growth was at 22%, while moderate growth was at 34%, 32% predicted stagnation, and 12% believed the market would shrink. So what does that tell us? While overall confidence is still leaning more positively than Q3 of 2024, the shop optimism we saw at the end of Q4 has started to cool. Looking at the combined totals, Q3 saw 56% of professionals expecting growth. Q4 jumped to 79% expecting growth, and Q1 of 2025 now shows 67 expecting growth. At the same time, concerns about stagnation or contraction have risen. In Q3, 44% expected stagnation or shrinkage, and in Q4, this dropped to 21%, and in Q1 of 2025, that number has climbed back up to 33%. Now, this shift reflects a more cautious outlook as professionals adapt to evolving economic and political conditions. This tempering of optimism isn't random. It reflects real developments happening across the country right now. Here are the 3 major themes shaping this quarter's outlooks. While the new administration has settled in, the ripple effects of recently introduced tariffs are starting to emerge. Many professionals are cautiously watching how these policies might impact material costs, especially for imported steel, heavy equipment, and manufacturing components. Will they boost domestic production or drive up cost across the board? It's too early to tell, but the uncertainty is making folks more cautious. The Federal Reserve is holding rates steady, and inflation has cooled slightly from 3% in January to 2.8% in February. And that's a good sign, but it's not yet enough to fuel a surge in investment. While firms are still facing tight lending conditions, which can delay decisions on new capital-intensive projects. So there are big questions about the future. Professionals are watching these key trends unfold. Will the federal infrastructure funding grow or plateau? Can AI maintain its momentum for fueling more data centers? And what will federal construction spending look like in the coming months? How will Trump's tariffs affect manufacturing and industrial construction in the U.S.? And will the current administration push for more deregulation, or will political gridlock slow down policy execution? These questions are creating a wait and see attitude, and that hesitation is showing up in the numbers. So, what can we make all of this? Here are my top 3 takeaways from this quarter's data. We're entering a measured optimism phase. Confidence is still there, but it's more cautious. Firms are moving forward, but with more risk management and tighter forecasting. Policy and economic signals matter more than ever. Contractors and construction leaders are increasingly responsive to federal action or inaction, keeping an eye on tariffs, funding programs, and monetary policy will be essential. Opportunities still exist, but it's selective. Sectors like data infrastructure, federal projects, and utilities may continue to grow, but the broader market is recalibrating after a very hopeful Q4 of last year. Strategic positioning will be the key. Thank you to everyone who participated in the poll. Your feedback helps this entire industry stay informed and forward thinking. If you've got additional insights, drop them in the comments and let's keep the conversation going. And if you missed the results from our Q4 poll, you can check those out on our website. The link will be in the description below. Together, we can keep tuning insights into action and build a stronger, more informed future for civil construction. Thanks for watching, and we'll see you next quarter. Bye.